In this monumental roundtable episode, we have some of the most famous, profitable, and verified traders in the world.
If you look at post-election cycles, in the past 50 years, the Russell has a 100% win rate. And there were wars, but in every post-election year, the Russell made a new high, so 100% win rate with like average of more than 15% gain. Based on these statistics, you only can be bullish. That's the only information I need.
Introducing Bernd Skorupinski, the #1 FTMO trader in the world. Fabio Valentini, a Robbins World Cup champion with verified results of up to 200% in a single quarter. And Andrea Cimitan, a recognized expert when it comes to order flow and a viral sensation on the show, with his last episode getting over 200,000 views. And with the full lineup being verified traders we know and trust, we can actually go and explore head to head exactly what it takes to be a profitable trader, no matter your approach and no matter your beliefs in the markets. How can you make money in 2025 through trading?
For us sitting at this table, it's pretty easy to say, hey, trading is not gambling. But for a lot of the people watching us, that's not obvious. They're just in trading not because they want to study or put in some hard work. They're here because they want some fast money.
Where do you draw that line of behavior?
I mean, it's...
When I have an understanding of the pressure of the market and I know that maybe I have more probability of continuing to the upside, I start to stack probabilities using order flow, seeking, for example, pattern that gives me edge like absorption or exhaustion. I'm not trying to follow the trend. I wait for the market to retrace to my levels and then I seek the continuation for the day.
You know how we see in the industry of maybe the teacher is questionable character, but he has so many students saying this guy is great and even showing certificates, and therefore people end up there and end up even more lost. How can someone navigate that?
If you're specifically talking about the three-letter guy from the concept side of things.
Well, ladies and gents, we have an interesting episode. I'm very proud of this lineup that we have today, and I think we'll have a very interesting episode, and an episode that we don't usually get to discuss certain topics. So first we have Fabio over here. We haven't done our individual episode yet, but your credentials speak for themselves. Ranked on, was it Robbins World Cup or?
Yes, Robbins World Cup and the CME Group Equity Cup.
Brilliant stuff. And then Andrea, obviously we had a rocket of an episode flying past 200k, and I think one of the most deep episodes that we've had. So I think this will be another mix that we'll have. And then of course the man that needs no introduction, I want to say industry superstar, and obviously FTMO ranked trader. There's nothing more to say. So I want to kick off with a topic that is going to be something that people don't speak about too much on podcasts, which is fundamentals. And I think you gentlemen all have certain experiences with fundamentals. I think Bernd is a big pillar of your strategy, and for you it's something new. And it also seems like, as well for you, Fabio, something that is developing from scalping towards your swing. So I want to kind of just walk through a building block of fundamentals and what is the essential pieces. Let's start off with yourself, Fabio.
Yes, so my main trading model is order flow, and in time I develop more long-term trading approach, thanks also to Bernd, thanks to Andrea. Andrea is more into macroeconomic and geopolitical and deep analysis of the economical condition, and what I took from Bernd is commitment of traders report, seasonality, and the way of analyzing the structure that is less chaotic than the structure that you get in scalping. And I incorporated all this information in a trading model for swing trading that is going pretty good.
Fair enough.
Yeah.
And then yourself, Andrea, what is the major things you're utilizing when it comes to fundamentals or macro?
Well, for sure, monetary policies is the first thing you want to look at. Like, whenever you're starting from a macro perspective, I like to go top down. I'm not sure, Bernd, if that's your approach as well, but I'd be curious to hear also about yours. And it's, it all starts from monetary policies and fiscal policies, because those dictates the rhythm of how the economic cycle goes. So let's say we're in an overheating economy. What's going to bring it down is maybe higher taxes, lower deficits, higher interest rates, and quantitative tightening, for example. So I think if you want to start getting into macroeconomics and understanding fundamentals, that's the first thing you should start understanding, monetary policies, because you should see the economy as this car, and the guy driving it is basically, if you're talking about the US economy, Powell and Donald Trump on the side. So if I had to start somewhere, that's where I would start understanding.
And Bernd, yourself, I think you have a pretty unique approach because your Nasdaq, hence the hat, your sugar and also palladium, and you were mentioning certain trades that are things that I've never looked at a chart at. So why is it that you end up taking trades on certain things that are less conventional?
Well, first of all, let me apologize for my voice. I'm a bit sick. If we had done this podcast yesterday, I couldn't have joined. But it's the first day. I have a little bit of a voice, so I sound like I'm in the middle of the puberty. So sorry for that, guys. Yes. So just in general, and people might have heard that before, that my strategy is basically what I call a two-step mechanical process. So first step is getting a fundamental bias. Once I'm biased, then I'm timing the market with the technicals. But now let's stick to the fundamentals. So Fabio already said. So I'm using COT. Heavily COT, but also depends on the asset class. For equity indices, I don't use COT, I just use election cycle and valuation model versus interest rates, what you also touched on. But for all other markets, except equity indices, I use heavily COT report, valuation models versus gold, dollar, and interest rates, and seasonality. Combine it into my fundamental strategy because I can read these fundamentals kind of in an objective way. I get an objective measure whether I'm bullish, bearish, or neutral, and then when I'm bullish or bearish, and I can go to my second step, which is then market timing. But I'm using these measures because they are objective way to read fundamentals. Everything else, like news reports, any kind of reports that you read, is very
Bias.
It's kind of biased in a way, right? It's based on your interpretation of things, right?
Yeah.
You could interpret it like as whenever you read, like when Powell has a speech, you could interpret it as bullish, others as bearish, right? It's like very individual. So that's why it's important that when you have a set of fundamentals, that you can use them as a objective measure.
Yeah, that's I think the problem with, like, you can get easily overloaded with information when we're talking about macroeconomics. Like every headline that comes out of a newspaper or a Bureau of Labor Statistics, whatever, it's a lot of information to process. So I completely agree that you have to be very selective and know what you're looking for. Like you don't just get news and try to make some view out of it. You should definitely choose which news you're looking for. And for example, the traders I've been learning macroeconomics from, they all have some very objective predictive model based on how, data is accelerating or decelerating. And they build very objective measurements of, for example, just look at GDP and inflation. If one is up or one is down, or both are up or both are down, that's a specific cycle. And so some sectors, for example, of the S&P 500 are going to perform better in this specific scenario, and based on the probability that will happen, then you invest in certain stocks or in certain sector or themes and blah blah blah. So I definitely agree, like you can get easily overloaded with information when you talk about fundamentals and macroeconomics especially.
How do you make it as objective as possible when it's just numbers and reports? Let's say, for example, the COT report.
Well, he's the guy to talk about the COT report for
you
sure.
can put it in a graph, right? You can put it in a
chart.
It looks almost like a trend, right? And then you have, in that COT report, you have three parties, right? For beginners, you have hedge funds. These are the trend followers, or that create the trend. You have the commercials, they are the hedgers, the users and producers. And then you have the speculators, the quote-unquote dumb money, the retail traders, right? And it's very objective how they behave in the market, because it's literally it's very objective way how to analyze, look at the graph, and okay, commercials, so the users and producers, they are creating a new all-time high, so at some point of time in the near future price has to reverse, right? Or, well, we could go into detail, hedge funds, they're creating a divergence. So what they are doing, so let me explain this quickly. So if price, for instance, makes a new low, but the hedge funds, they're the trend followers and creating potentially the new trend. They are making a new high. It's like almost like a trend. So you would imagine you have on the price chart a new lower low, right? So you make a new lower low, so you would say, the downtrend continues. But on the hedge funds, on the line chart, you see they are making a new high. So they're making the first higher low. So do you say that lower low on the chart itself is a fake move to the downside here, because the fund managers who create a new trend, they're making the first new higher low. And then you know, okay, that's the first fundamental sign that price has to move higher eventually, because the fund managers are making the price.
Yeah.
It's a must. It's a must. It's a self-fulfilling prophecy. And the other way is like vice versa, obviously. If price makes a new high, right? So make a new higher high. But the fund managers are, and you see this right now in gold, by the way. I mean, we are recording the podcast is 19th of February. So price of gold made a new all-time high. But the fund managers are they made a new lower high, the first new lower high. So you know that new all-time high in gold must be eventually a fake new all-time high, because the fund managers will start selling. Right? So price has to reverse at some point of time. It's a given fact.
That's really cool. I think it's kind of the same approach you use with volume.
Same approach I use with volume.
Because also in the short term, it's cool because you can see market pressure and you can see big market participants are, pushing more on the sell side or on the buy side. So it's very similar to VSAs or something like that.
Yeah, but also the way Bernd approach fundamentals is really similar to the reading that I have of COT. Like I'm searching for divergence in value and in pressure from the big market, and I usually go counter trend from retail traders and sentiment analysis, because from behavioral finance, usually 90% of the traders are wrong. So if you get to the small trader, small market participant, from the sentiment side to the no reportable in commitment of report, they are 90% of the time on the wrong side of the market.
So the non-reportables are basically the speculators, the retail trader, it's us. Right? So that's why they're called in the report the non-reportables, because at the end of the day, when you look at the whole report, the whole open interest, it's basically you have the whole open interest minus hedge funds, minus commercials, and then the leftovers are the non-reportables. These are the retail traders, and you can show them on a graph as well. It looks like a trend, but they're going, are they getting more bullish? So the trend is going, the retail trend is going up, or the retail trend is going down, right? And this was a trade last year, most probably you participated in that as well, when the euro made this new the high and the dollar made the low, and everybody said like the dollar gonna go to shit and the euro is gonna rally. But on the retailers, on the non-reportables, on dollar made a new all-time low. You have to imagine the retailers were on the dollar all-time bearish on the US dollar. It's a self-fulfilling prophecy what has to happen. The point is, with this kind of data, you cannot time the market, right? Because it can take time for these fundamentals to play out. That's why you have to use technicals, and we all on the table use technicals to time the market, because it can take time for these fundamentals to play out. It doesn't mean that now because the hedge funds are making a new low on gold, that gold tomorrow has to dump. No, it can dump in like 1 week, 2 weeks, 3 weeks, maybe in 6 weeks from now, right? And that's why you have to use the technicals to time that market.
I want to take a moment from the episode to remind you of Alpha Capital, a long-term sponsor of the show, a leading prop firm in the entire industry. And in the last year, they did over $50 million in payouts. That's why they are a top-ranked prop firm that's been around for years and is not going anywhere. And with the multiple step plans they have and the multiple packages that they have, there is going to be something catered specifically to your needs at the most competitive pricing. And because we have a long-term relationship with them, we are able to bring you a massive discount of 20% off all evaluations. So click the link in the description or use the code TOT to get 20% off all your funded accounts. Working with the best prop firm in the industry, Alpha Capital. When it comes to the technical side, I'm particularly curious, Fabio. So you are I guess your career has been built on scalping. What is driving a change towards more fundamentals, if it is more, or at least more towards swing?
So it's kind of a diversification of capital, but also time commitment to the profession. Because when you start, you have the number one priority, that is making money. So getting a performance like we are doing in the World Trading Cup. You are all focused on making a percentage and getting the first rank. Then as you progress, you start to understand that the priority number one as you get more wealthy is time. And now I value more time than performance, and swing trading or macroeconomic model or option trading is one trading approach that gives you time. That is the assets that at the moment I'm seeking the most and I'm searching the most. And I still continue to trade order flow and scalp, but it's incredible that the process that I have in order flow is really similar to what Bernd is using in swing trading, because I start from the building of the narrative, but I don't do this from monthly or weekly. I do this from the profile of the Nasdaq today and yesterday's session. When I have an understanding of the pressure of the market, and I know that maybe I have more probability of continuing to the upside because all the indication of the volume is telling me we are with a strong buying pressure, so you need to search a discount for the day to continue higher. And I start to stack probabilities of this using order flow, seeking, for example, for pattern that gives me edge like absorption or exhaustion, and I try to get asymmetrical risk to the reward. That is exactly what also Bernd is doing. I'm not trying to follow the trend because I have worst risk to reward ratio. I wait for the market to retrace to my levels and then I seek the continuation for the day. So it's the same playground that Bernd used for long term. The only difference is that I cannot use commitment of traders report. I cannot use seasonality. I can use statistical study of the session in the last year, for example, on Nasdaq, to know that maybe 70% of session in New York made the all-time high on volume, and I exactly know where to expect volatility, and I exactly know where to expect my pattern. So I just use different probability stacking, but in the same way. Because at the end of the day, our role as a trader is bringing the probabilities to our side, build an edge, and I do this in order flow and the exact same method I use for swing trading. And usually when I check what the retails are doing intraday, because we have this kind of information with sentiment analysis, I usually go opposite. So if they are heavily bearish, I search for long opportunities, and I check also that the trade that Bernd mentioned, I also took the short on euro dollar at the moment. Even if all the sentiment was long, people were believing that euro dollar would continue to the moon. And it's cool to see that at the same moment that if you get the sentiment on euro dollar from my forex book and you get this in a statistical format to see the delta, the retail at the top were in the extremely high on euro dollar. So everyone was buying. It was like 60,000 contract for euro, and the market collapsed. So just this kind of behavioral finance, it's working really hard, because at the end of the day, psychology creates the market. So doing the opposite and the contrarian crowd strategy, I see them working in short-term trading, scalping, to swing terms, scalping. And also, if we want to talk about the asset of the moment, Bitcoin, I analyze in the last 5 to 10 years that all the market law were created when there was some kind of shock in the market, like the failure of FTX created the law that we have at the moment. Then the ban of mining in China created another law. So you always see huge euphoria before market turn to the downside, and the same for upside. And this concept in order flow is called trapped buyers and trapped sellers. So it's the same trading model from short term to long term.
And it has that sentimental psychology element behind it. You mentioned here transitioning towards options.
Yes.
What is the reason behind that?
So the reason behind that is that options, I see options as something that can give you a more statistical approach to trading, and you can also use option to go market neutral. So not to try to predict the direction of the market. That is something that even if you use only as a narrative in scalping, you need to have a bias for the day. But with option, you can create strategies that are purely based on mathematics and statistics, and it's something I like because they give me predictable returns over the months or over the quarters. That is something that it's really hard for scalping, because maybe you have an incredible month and the next month maybe you are in little drawdown, then you have another incredible month, so you have not constant returns. And this is something that you also see in swing. With option, you can predict more easily what is going to be your return based on the risk that you are inputting in the market. Okay. And also we had my first aha moment was from the shift from price action to order flow, because I understood that I can see the volume behind the reason of the price. And the last shift I had the last week with Andrea, because we are attending a big seminar for option, and to see how much option influenced the intraday price of the underlying asset was another aha moment.
Yeah, definitely. I think there was also a cool podcast came out recently from Jim Carson in Riz podcast. It was exactly talking about like how in the stock market, let's say 60% of volume is moved in options, and the biggest movers in options are market makers. So if you analyze the flow of options through dynamic delta hedging, something called dynamic delta hedging or dynamic gamma hedging, you understand that, with order flow, we see what's happening inside candles with volume. But what happens inside of that, it's mostly because of hedging due to market making activity in options. So it's like we were at the price action level thinking, we just discovered they hunt stop loss. We know everything about the market. And then we realized in order flow, here's the stops being taken. But now here is like a new dimension of understanding market mechanics, that it goes even deeper into the rabbit hole, and it's like really cool.
Why is there a link between options activity and the underlying asset?
Because options started as mostly hedging financial instruments, yes. But then they became the instruments that they need to hedge because of market making activities. Like what we saw in GameStop, for example, that was called a gamma squeeze. And a gamma squeeze is exactly this: market makers that sold a bunch of put options or call options, they get squeezed because of how fast price is expected to move in the short term. And it's but it's very complex. Like the world of option is not easy to understand for your average leader. Like it takes some time to understand.
And the optimal way is to swing trade towards the options.
Not necessarily, but they're definitely, like if you're for example a passive investor, instead of like you can even build structures in options that pay you an interest rates without depositing your money into an interest rate account or a bond. There's something which is priced in options that pays you an interest rate. It's called RO, which is one of the Greeks, and you basically get an interest rate for free. Basically,
by holding.
Yeah, with less commissions, and it's like even better. Or even if you're just not like a long-term investor, if instead of buying a stock, you build the option structures, maybe you roll a call, or there's a bunch of strategies there, you can get better returns for lower risk because of leverage. And because when you're basically buying an insurance that price doesn't go down. So if it goes up, you're earning more money than if you bought the option, and the loss is capped to what you paid as a premium. It's crazy. It's a more dynamic way of risk management, but it takes some time to learn.
And I guess this interest side of things is equivalent to a positive negative swap.
Yeah, you could say that.
And it would be enough to be influencing participation. That this swap is not just symbolic, but it's worth holding as well.
Yeah.
Okay.
So the crypto bull market is well upon us, and with opportunities left, right, and center, why not utilize other people's money instead of your hard-earned money? So introducing to you the world's first crypto prop firm, Bitfunded. And they've partnered up with an exchange to bring not only the world's first crypto prop firm, but actually a prop firm that has an exchange-like environment. Imagine as if you're trading on Binance. With all the benefits that prop firms bring, with the leverage you can have, or hundreds of thousands of dollars in buying power, utilizing other people's money, so your total risk is just a couple $100 max, or as cheap as $79. And with the special offer that they have going on right now for you as a Titans of Tomorrow viewer, if you buy 2 prop firm accounts, you'll get a third one for free. So click the link below this video to head over to the Bitfunded website and start to utilize other people's money to benefit from the crypto markets whilst minimizing your downside.
Bernd, yourself, I know you trade a lot of wacky things, but the options market is not really your domain.
No, purely futures.
Okay.
And CFDs.
And when it comes to the comment that Fabio made of time in the game towards money, and I think that's maybe something that you also aspire, or let's say ascribe to, which is you're not looking at the markets every single day or multiple hours a day. It seems like it's just a few hours a week.
I like to do it still. I don't have to.
When it comes to specifically your time with prop firms, obviously most notably being FTMO, is there a benefit, or is there a reason to be involved more, or you can actually still have this life and also a little bit in the markets approach and still find good success in prop firms? Or did you have to navigate more in an aggressive or day trading way to chase the passing of phase 1, phase 2?
Well, yeah, I mean, you could dissect this topic of prop firms like in challenge evaluation period to then once you're funding
Right.
period. But then there's always like for some prop firms, they pay you every second week, and then you have prop firms like FTMO. It's like you can be in a position for literally like 2 months, but then there's a payout period. So yeah, you can also still be flexible, but you have to kind of be more looking out for, okay, there's a certain date, then you have to request a payout, or you have to at least close all your positions. So it doesn't make any sense that 2-3 days before like the payout day that you open a new swing position, because you might expect to hold that position for like a few weeks, and it doesn't make any sense to open that. So you're kind of limited you're limited because of these payout days, obviously, when you are funded.
And with your, I forgot the name of what it was, but it was an A-book prop firm that you were working with.
I didn't have any rules, so I
Okay.
could have. I'm able to hold positions as long as I want.
And I guess that allowed your preferred behavior.
Exactly, that's my preferred behavior.
Okay. And you also mentioned your two-step approach where you introduced timing through technicals.
Yes.
Are you also utilizing a similar approach as the gentleman of order flow and reading these kind of things, or is it more just the supply and demand we spoke
Yeah,
about?
simple supply and demand. Yeah, basically what I also have on my YouTube channel.
Yes.
It's simple. Yeah, of course a little bit more in depth, but yeah, simple supply and demand. Keep it simple for market timing.
Okay,
Yeah.
and the for example with Andrea, we had a huge conversation about order flow and absorption and these kind of concepts. Is this something that is in your approach not something you utilize?
Not at all.
Okay,
No.
okay.
I'm obviously curious what Fabio is doing, and we're gonna have a chat the next few days, obviously, and we gonna align our strategies a little bit here and there. But
that sounds fun. Yes.
Yeah, it's going to be a lot of fun. But yeah,
Fair enough.
never stop learning, right?
Yeah, because it seems like you're learning from Fabio, and then you're learning from Bernd, and it's just everyone
we
is
are learning
collaborating.
from each
Yeah,
other.
it's very
Yes,
collaborative environment, right?
Well, when it comes to, let's say, different ways of looking at things, for example, you're not using order flow, you're loving order flow. Is there a element of you have to pick one or the other, or there can be a nice mix and where you could add things from each other?
I could say that order flow is pretty fucking useless in swing trading, for example. So yeah, like it's like you're looking for short-term divergences in market pressure, which you could use to time the market better, maybe, but it's like, like we've seen some win rate that he's no use for order flow. Like,
Yes,
like
yes.
with swing, again, if you're a scalper, or if Bernd ever wanted to get into day trading, I would say Bernd go with order flow. But for swing trading, I don't know. I've seen Patrick Nill. He's we had, I think, an interview
Yes.
with him, and he's using volume as a more broader concept to time the market. Like if Bernd's way to time the market is technical is supply and demand, they use not supply and demand zones in that sense, but they use supply and demand as market participants in general, and market participants express their interest with trades, and those trades can be summarized in volume, so they see where the volume and the interest is going, so they follow the money, kind of. They follow where the big money is going, not through the COT report, which is a much objective way of also understanding who is doing what, but the volume tells you where is it going with very good objectivity. Still, you can't differentiate, hey, is that volume purely institutional or
Yes,
hedge?
yes.
You can't understand the direction of it, but just seeing where the interest is going and where price is accepting new levels, that's a cool way of swing trading they're using very, very effectively and efficiently. So yeah, if like I'm also a little bit newer to swing trading, but I'm shifting towards that, and that's what I'm using. I'm using volume as a whole, not as order flow.
What I realized as well, like when it comes to swing trading in particular, if you're right with your fundamental analysis, like going to step 2, the technical timing, it really doesn't matter how you time the market.
Yeah, definitely.
In theory, like even practically, you could use a trend line breakout, price action reversal. any ICT strategy. You would be right if you're fundamentally
No
right.
way,
You know,
he
like
said.
no, like seriously, like you could just jump into the market if you're fundamentally right.
Makes sense. You have the direction.
You
That's
have the
gonna move the
direction
market,
right.
definitely.
You jump in, you put the stop loss above the top or bottom, depending if you go long or short, and that's it.
But also that's the
right?
question. I think it's fair to ask. Like when we say fundamental, what do we mean? Because like from what I understand, your way of doing fundamentals is understanding mostly participation through COT report and
Seasonality
statistical
and
with
valuation
seasonality
models,
What,
right?
yeah, can you get deep into the valuation model? What do you mean with valuation?
Well, it's like kind of a relative strength theory in a way,
Right.
like one asset versus the other asset.
Like
But-
intermarket analysis.
But at the end, when we have to define fundamentals, right, then I would say everything except price is fundamentals. Are
Okay.
fundamentals, right?
Anything that's not technical.
Anything that is not technical, anything that is not derived by price,
Right.
I would consider kind of
Fundamental.
fundamentals, right? But then you have so much fundamentals,
Yeah, that's
and then you
what I
have
mean.
to exactly. Then you have to use really
What's
the ones that
useful.
have impact on the market, and it's not like chit chat.
Yeah, of course. Because mostly when I started studying fundamentals, I understood fundamentals was macroeconomics, but macroeconomics is one type of fundamental. Like fundamental analysis is the analysis of the fundamentals of like the basics of what moves price.
Yeah, exactly what moves
So,
price. Everything
yeah.
that is not derived from price, because price doesn't drive price. Fundamentals drive price in the long term.
Yeah.
And then
Yeah, and there's so
whatever
many different
drives
ways.
price are considered fundamentals.
Yes,
and then
yes,
you have
yes.
obviously the participants in the market that drive price.
Yeah.
The commercials, the users, producers, the hedge funds, and
Yeah, and then the reason why they do eventually certain moves that you see in the COT report maybe are macroeconomically driven, but still I think that for a person who is studying macroeconomics, like still you might study macroeconomics as a retail trader, but there's teams of hedge funds with people with PhD in economics and blah blah blah, and there's a report telling you what they're actually doing.
Yes.
So like COT is like skipping the macro, and okay,
Yeah,
but what they're
exactly.
actually
That's
doing,
so
you know,
easy.
it's
Yeah,
like
yeah.
so that's like a cheat sheet. Yeah.
Well, it becomes like a leading indicator.
Yeah, that's
which, as
definitely
you said,
true.
self-fulfilling also.
Self-fulfilling
because
prophecy
They're,
at the
they're
end, yeah.
driving it. I'm also interested with you two gents, which is you're transitioning towards swing, and you're doing it for lifestyle reasons, I guess, less time on the charts and to have a bit more freedom. But I'm curious, do you ever feel like switching things after so many years of success in one way? Do you not feel like, okay, I don't want to change something that is not that is working, and what if I have to go back to zero and the learning curve and the time commitment will take to perfect it, instead of just keep doing what you're doing, which is working? Why still take that leap to transition towards something that is new?
I'll talk briefly about myself because he's been day trading and scalping for way longer than I am. But from what I can say is, that's the cool thing about swing trading. Like, you can test it without it taking so much time out of your day trading. So you can still day trade for a while you get the swing trading thing going, and that's the cool part. What do you say?
I think that is not hard for me because the approach to the model of order flow and the model of swing is the same. Like, what I like about Bernd is that he's not subjective. He's like really mechanical in the way that he evaluate the fundamentals, so I don't need to get some kind of bias, but I just read the report. My skill is to read the report, create a narrative, evaluate this report with intermarket analysis, add seasonality and structure. And it's exactly what I do in intraday and scalping, but with different data. So it's the same procedure, I just switch the kind of data I analyze.
Yes.
And it's not for me switching from one strategy to the other. It's just expanding and diversifying my capital from intraday and scalping to swings. So maybe I have two different accounts, I trade completely on two different accounts, then I have the account for World Trading Cup. And the approach is not stressful at all. If I have to be honest, swing trading is 10 times less stressful because you don't need to take a lot of decision during the day. With scalping, you need to be really fast at taking multiple decisions every day. Like, okay, you took 3 targets today. What will you do? You will stop, or your trading model is working perfectly for the day. So you want to push on the gas. you want to risk, you want to stop, you want to take some time for yourself. And if you take one stop, you stop with that profit. You need to have a lot of rules,
Right.
a lot of decision. With swing trading, I chart for Sunday. I have 1 day of charting during the week, and then it's only checking if the narrative that I built and I have any trade that is getting into my trading area with technicals, and I just use my strategy to time the market that is not purely price action, is the charting of profile. So it's auction market theory, it's just profile shape, and this is the only confirmation I use. Bernd, for example, use supply and demand, and I wait for my lower time frame to create the pattern that I want from auction market theory. This is something that I explained openly also on YouTube. And the only reason I prefer auction market theory and volume profile to price is that price is hiding a lot of data inside candles.
Yes.
With profile, I can see exactly the most sensitive level, like the low volume node, that is what I use. And I can just put my limit there and forgot about the setups. I can just cover myself on the level that will get reached with the lowest probability from the profile shape of the day or of the week, and I just let it run.
Would you say there's any interesting correlation between fundamentals, which we would define as non-price action related things, information, and let's say politics, and obviously the political behavior can shape the landscape, especially now as we are entering a Trump era and post-election, let's say cool off maybe. Is there any influence in your trading behavior because of that?
Yeah, that's where I use my election cycle seasonality as my major driver for fundamentals, trading stocks and equity indices, right? And now we are obviously in the post-election cycle. And we're going to be freaking bullish in post-election cycles. Regardless of what's everything else. So if you look, like, it's quite interesting. If you look at post-election cycles and you look at the Russell, in the past 50 years in post-election cycles, the Russell has 100% win rate in every single, and there were wars. There were like stuff is going on every freaking year, right? And the world is going down every year as well. And but in post-election cycles, in every post-election year, the Russell made a new high, so 100% win rate with like an average of more than 15% gain. So you only, based on these statistics, you only can be bullish. There's nothing that you can say, oh, I need to be bearish because X said blah 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 blah, blah, right? You have to be bullish based on statistics. So yeah.
What is it about the post-election that causes this bullish sentiment?
I don't know, and I couldn't care less.
That's
like, this is way too much information. That information doesn't, it's like nice to have a chit chat here on the table, but this information doesn't make me money. What is important for me is what information does make me money and is valuable for my trading strategy. Is it valuable that I know that it's because of whatever is going on in the world, or is it because of 100% win rate in the Russell during that particular year? Yeah, that's the only information I need. Everything else is noise for me, for my strategy.
And that post-election season or cycle, what kind of a duration are you interested in that narrative of bullish?
50 years back.
No, I mean, like, is it going to be a couple months from now? Can we expect it for his whole term? Or
yeah, so no, for the whole term it looks different, right? No, because when I say post-election year, it's literally this year, 2025. Next year we're in the mid. Next year we're in the midterm cycle, and then we are again in the pre-election cycle. So 2026 is midterm, 2027 is pre-election, and 2028 is then again election year, and 2029 is then again post-election year. So the election cycle has like 4 sub-cycles.
I see.
Yeah.
And is there certain assets that are more reactive towards a post-election cycle?
It's just basically stocks and equity indices, right? They go hand in hand.
And in fact, I think today it hit an all-time high, if I'm not wrong.
What?
The Nasdaq, no?
I was not trading today. I was recording podcast with this guy.
Despite that.
Yeah.
Fair enough.
But usually, just to add this, usually in post-election cycles, so we have a rather weak first quarter. So now it's supposed to be rather weak, into March, mid of March, beginning of April, and then we make the bottom, and then we are off to a nice rally. So also for equity indices right now, where I said like for the Dow, for the Russell, rather choppy environment.
It is.
It is. So my hands are down, right? I'm not touching them. So I'm waiting kind of for like mid of March until they maybe drop a little bit, and I'm timing then the market to buy them, right?
Yeah, that's the cool thing about option in this like more consolidation environment. You can earn from consolidation. True. Like you can earn shorting volatility, for example. Yeah. Like you don't expect big volatility, so you're short volatility. That's another cool thing.
You can trade the volatility, let's say.
Yeah, or you can trade an increase in expected volatility, for example. That's cool. Okay. Also, another cycle which is very interesting is in gold. Gold also has a cycle which is a longer cycle, and it's not like that's seasonal, because we have election cycles which are every 4 years. But for example, with monetary policies, you don't have a perfectly rhythm and cadenced cycle, but it's more of where inflation goes up or where inflation goes down. But if you take a look at monetary policy cycles, they perfectly follow like gold perfectly follows the monetary cycle. That's also really cool. But yeah,
I finally have a special offer to share with all of you from the US or my futures traders, which is over 20% of the listeners of the show. And that is Alpha Futures, a leading futures prop firm that is working with Trader8 and NinjaTrader that are compliant with CME regulations. With the largest end of day balance drawdown in the industry, a 90% profit split and same day payout. And with the most competitive pricing in the industry, with accounts starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So why not get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and larger capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry to make this a home run offer if you are a futures trader.
And when it comes to gold specifically, do you spend a lot of time utilizing that towards options? Or
No. I'm just talking about pure price
in general.
Of gold.
Okay,
Yeah. You could trade with CFDs or like probably CFDs, but maybe futures. Yeah.
And when you are now utilizing specifically you, Andrea, the mix of knowledge that you have, which is the technicals, the now towards options, swing, everything that we've actually spent a lot of time speaking about.
Yeah.
What is your destination to arrive to? Say, okay, these are my preferred asset classes, this is my preferred domain, options versus futures versus just CFDs. How do you decide where to spend your efforts? Because you are looking to spend less time on the charts instead of, you could trade all of them, you want to pick a few. How are you deciding what is worth your time?
Well, I mean, the thing with global macro is that it's global. So the same reason he's trading like wacky assets such as sugar and stuff is because you don't care what you're going to trade. Like you trade wherever you see that there's a fundamental reason to trade. And so you trade it. So, since you don't have to manage a lot of trades, you don't have to manage a lot of position, you don't have to be super dynamic with risk management or building positions, then, you can be pretty basic with it. Then you can have a very diverse group of assets and a very diverse watch list without big problems dealing with it. But yeah, like you just trade what you know best mostly. And, I've been mostly active on indices, on gold, and on oil, for example. So those are the things I'm starting with. And then I'm, eventually going to fully expand to have a wider range of options and not stay months without trading maybe. Yeah, that's how you, expand your possibilities of trade. I think, having the more high you go with the time frame, the more you can space out with the amount of assets.
The decisions you have to make, yeah. But I know you are well documented and your preference is swing trading. But I know also inside OTC you have day trading elements or certain individuals that are utilizing your philosophies and I guess deploying it in a day trading way. How are they able to do so? Even if it's not your chosen way to do it, how are they translating it towards a day trading narrative?
Well, with supply and demand technicals, you can just also go lower time frames and trade like
so it's less on fundamentals.
It's less on fundamentals. Okay. You can still look on seasonal behavior or valuation models, but then you purely trade supply and demand levels, purely technicals.
Okay. And do they allow a long-term bias based on fundamentals to say, okay, I'm only going to trade with that trend, with the narrative in mind, or is it just up and down with price action of supply and demand?
Yeah, price action of supply and demand usually. Okay. Yeah.
Why is that not something that you do yourself in your own trading?
I don't need it.
In terms of time towards...
I don't need it, right? I mean, I rather would always say, for me, myself, I would rather say scale capital, increase the capital, and stick to the same strategy. And this is how I make more money, right? Not through frequency, not through anything else. It's just through scaling capital and then sticking to the same routine that I always have.
Yes.
Never change a winning team, just scale capital.
Which, if I'm not wrong, it was 2 hours per month was your...
Exactly. That's the goal for like, I always, 2 hours per month. That was like what I give to all the community members as well, like 20 to 24 hours per year. And then you just scale capital and then you do the math, how much money you want to make. Right?
Yeah. When it comes to conviction in a trade based on a fundamental analysis that you've done, are you also modifying your risk? Because 2 hours is just relative to what you risk as a percentage.
Or like monetary wise, right? Yeah.
Yes, and are you standardizing that, whatever your R is across the month, across the year? Or are you modifying, saying this is a high conviction play versus this is not as much? And
no, all my setups are high conviction plays that I play for myself, right? It's like my standard rule.
And therefore your risk is maintained throughout. Each position is a similar dollar amount.
Similar dollar amount, yeah, exactly. So if you manage at some point of time 2 million and it's like, if you say, okay, I risk 1%, it's like 20K, right? Can it be maybe then sometimes you risk like 25, 30K, could be like 1.5%, whatever, but yeah, like around that. Monetary model.
And what do you, I know last year when we had such conversations, you were with this A-book prop firm. A year later now, what is on your horizon for continuing to scale capital? Did I open up a can of worms? I didn't realize.
It depends on when the podcast is going to be released, right? So I could already say that by now, when the podcast comes out, we launch our campus fund, our own prop firm, right? It's a real prop firm with real capital, instant funding, and I'm going to fund myself, obviously, because it's real capital. So at some point of time, my goal for this year is basically I focus on funding myself with our prop firm and trading my own capital. I want to get away from all this, and maybe we can navigate slowly to that topic as well if you want to, I don't know, like through that B-book shit, right? I want to get away from it. That, right? It's too
Is that more because even though you've had significant amounts in payouts in dollar amounts that's gone to your bank account,
significant amount, right?
It's still the headache to reward.
The headache, you never know like the rules, you never know if the prop firm is like still there the next month, and then rules changes overnight, and hey, have you checked your email? I think that prop firm changed the rules, like all this kind of nonsense that's happening right now. I just don't want to bother myself with that, right?
Yeah.
And then they start, and then you're making profits, and then you start, maybe Mr. Skorupinski, maybe you should lower your risk. Hey, Mr. Skorupinski, you got your second notice, maybe you now lower your risk. Like, hey, I'm a swing trader. I take like a daily level, sometimes a weekly level, and I take like maximum 2% risk. What about a trader who trades a 5-minute zone and takes like 1% risk? Like, you cannot compare. You can just not compare, right? So yeah, I'm just very fed up with all this B-book nonsense.
When it comes to the A-book side of the funds that you have in your own firm, what is your strategy in the sense of scaling towards? Do you want to know how much is being executed on your behalf on the prop firm? As in, are you going to see the full dollar amount, or you just want to be sheltered and say, okay, I'm going to be trading 100K accounts, but on the back end, who knows what is being executed on?
Yeah, it's like stuff that I am not necessarily eager to talk about, but if it's just my account, right? So on Campus Fund, we can scale right now to $1 million, and I'm going to fund myself with $1 million, right? Okay. Obviously, and people have to understand, right? When it comes to A-book models, these are not like, I don't put like a $1 million on my trading account and trade like $1 million. It's like a margin account, and the margin is basically your drawdown that you're allowed to lose, right? People don't understand that. They think like it's an A-book account, but it can still be a demo account, but it's just the margin that is real, right? It's put down as a deposit. It's not like, hey, I'm funded A-book $200,000. It's not necessarily real $200,000. It's the margin. It's like if you have 10% drawdown limit, that's the margin. That's the real money.
That's the A-book.
That's the A-book. Yeah. So people have to understand that.
The reason I asked, I thought maybe if you're opening up towards your own prop firm, you might have a huge capital jump and maybe some adjustment period for yourself. When it comes
not yet, but I mean it's like.
If you're starting with $1 million, it's not a huge jump for you.
Not a huge jump, but it's just like I know I'm getting paid out, right?
Yes. When it comes to instant funding model, obviously this is pretty unique in the industry.
Yeah.
I think maybe certain people have tried, but I don't know how it's gone. But I know this is a change in the space. What's driving that change, and what is your mission with it?
I mean, what's driving the change is pretty clear. Everybody's so fed up with the evaluation model, right? Everybody's getting, I hate the word scam nowadays because it's so overused. Everything is scam, right? And everybody on the table for sure is called at least once a scammer, right?
Yeah.
So everybody,
a couple times a month.
No, I mean, it's way overused, but I mean, nowadays, right, the entire space, prop firm space, is really, it feels like it's breaking down in a way that they're closing left, right, and center. And you don't know if you're a prop firm that you're trading on, that you did a 3-month evaluation, a stressful evaluation, and then you're like, after 3-4 attempts and you're finally getting funded, then now you're funded after 3-4 months, that is now eventually getting closed down or changing the rules that you cannot make money anymore, or even worse, you're making money, then you're not getting paid out. So everyone has been at least quote unquote scammed once by a prop firm, and I think like the majority of people are just fed up of that kind of industry and the way it goes. And that's why I also was a victim of getting scammed, right, and not getting paid out left, right, and center. I think overall at least like I would say more than $50,000 that I never get paid out from various prop firms. It's a lot of money that I worked hard for it, right? And just so fed up. So that's why I thought like a change needs to be done in the industry, and this is like the first step into the change.
Yeah, I thought the first step towards change was changing the futures prop firm. That was even more fucked up.
How so?
Like the rules you have there. Like if you think CFD rules are hard, go and do a future prop firm. Good fucking luck. Like it's unbelievable. Like you have trailing stop loss on drawdown on equity, and like wow, it was crazy. Like I did the last time I approached a futures prop firm, I was profitable the whole time, and then at some point there was like some sort of misplacement of orders made by the prop firm through the data feed. Okay. And they have control over the data feed, so they kind of slipped my order in a place that like it was a very weird thing because order in futures are processed completely differently than CFDs. And so they banned me because of that. They banned me also because of like I failed the evaluation even though I was profitable the whole time because of a weird timing, because market that day closed in a different times in that futures contract instead of the other. Like it's much more complex and there's much more rules, and it's really now the solution I've discovered.
The one that scares me, and I'm not even trading futures, but the one that I can just see as a red flag is, why is your drawdown following you as you make profits? Like, to what benefit apart from
first red flag?
It's like having a whoosh behind your back.
Doesn't make sense whatsoever. Doesn't make sense whatsoever.
We did with the community one stress test during the summer that the market is choppy, and the goal was to pass the prop firm with 2 phases live. Okay, so explain to all the trader, recording with every single execution, showing them that it's possible. So I remember it was August. So I start trading, scalping the Nasdaq. Imagine August, the market is like choppy. This August was not choppy, but previous year it was. So phase 1, perfect. Phase 2, perfect. Then I remember one day in the funded account, it was a really good session. I was up $7,000. The market retrace. I was $7,000 in profit. So I lost 2,500 of that profit.
Okay.
Disqualified. It was like, how is it possible? Because if you make profit during the day, your drawdown follows you on the profit. So if you are in a trade risk-free on Nasdaq and the market is running high and you just risk-free and the market retrace, don't even touch your break-even, you are disqualified.
It's your unrealized P&L drawdown.
Yes.
Yes. It's weird.
So like
if a trade goes to back to break even, you're done. What the fuck?
So in the futures prop firm, you need to hope that you will not make too much profit in one day. Okay. So you just have a conflict of interest on yourself.
Yes.
Wow. So it's
with that being said, are you trading with futures prop firms?
No. It was only for the student to show them, and then after that they told me, okay, now you subscribe to the World Trading Cup in the future, because we have a pushy community, you know.
Okay.
They want always to test the educators and everything, so we just did the World Trading Cup that is better than, they don't have these kind of rules on drawdown. But to be honest, I don't think that the world of futures prop firm is better.
Not at all.
Not at all, because to make a prop and to keep the account for 1 year in the futures prop firm, it's really, really difficult. I don't know if later the drawdown gets bigger. I will not make the name of the prop firm futures, but like the drawdown, it's unsustainable.
As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it. And probably you'll be using it for years to come.
I think it's also maybe like in the forex prop firm side, yes, we have so many going bankrupt and disappearing, but on the flip side, because there is so many, they have to compete to have favorable conditions, whereas it seems like in futures there's just a handful of big names and they're kind of like a monopoly, so you end up only with them. Will you have in your one futures? I guess you're a futures trader, so
Well, these are so we have stocks. So we have stocks, and so we have SIBO market quotes. So
Okay.
everything is from everything that is available on SIBO market quotes. You get as to trade. So these are kind of these are CFDs, but they are kind of one-to-one derived from futures.
I
So
see.
there's hardly any spread, and you have like more than 1,000 stocks without any kind of spread as well. So, yeah.
I guess how it's executed, it doesn't matter to the trader. As
doesn't
long as it's
matter,
the price
yeah.
and
What
the
matters is
conditions.
at the end the spread, right? That's what matters. Whether it's then a CFD or closely derived CFD or like a real futures or futures CFD, whatever they are now. There's so many derivatives nowadays out there. What matters to the trader is the spread on the market, right?
And now that we've ended up on the topic of, let's say, the industry, I think yourself, Andrea, is probably the best one to speak about, which is, I know you document a lot about different traders, different figures, let's say a Patrick Neal that we've had on the show. How are you seeing the terrain shape when it comes to education? And just like we've spoken about prop firms, how it can be challenging, same is the case with education also.
That's a very wide question. I don't know where to start. Like, I think we're entering an era where people are more and more aware of how gurus can fake profitability and guru-ness. So, it's like I want to be a part of this change by telling people how the industry works from the back end. I had I started trading in a very not so, let's say a very scammy environment. That's where I started my first steps in trading. And one guy I met there, and then we've done our paths in trading, but he still stayed in that scammy side of things. And I met with him years later, and he started telling me some stories about how he is running some gurus in Italy that are completely fake. Like it's like this 18-year-old kid with Lambos and Bugattis and not
like
maybe
a
not
guru
Bugattis.
agency.
He's like the agency behind gurus. And he told me some numbers, and I got freaked out because in Italy we're trying, and also in the international market we're trying to have the same mission that Bernd is having. So like providing real trading educations from traders with real results, like legit stuff, because education is amazing. But and seeing the kind of revenue that we're making, like by trying to be as ethical as possible and having work ethics, and seeing what numbers these gurus are having with those schemes where basically they just they show a bunch of Lambos and stuff, and then they show the MetaTrader withdrawals, and it looks like a real account, but that's all like
marketing
completely
accounts,
fabricated by a broker, white label by a broker, which I'm not going to state the name, but it's a pretty famous one. It's a pretty big CFD broker, but it has extra headquarters in some weird Caribbean island, or I don't remember where exactly, but they were making hundreds of thousands of dollars every single month from people depositing money, getting CPAs from it. And then they also had a prop firm, which is also not so big, but kind of big, that also provided them with pre-passed challenges so that this guru could sell the prop firm passing model, and they would 100% get scammed by the prop firm and not get the payout in the first place. And with all this model, they make millions and millions of dollars every single year. And this is just one little guru. Like, it's the newest one in Italy, and Italy is a very small market.
Crazy.
Just imagine the scale at which this is happening globally and internationally. Like, it's crazy. And it's a huge market. I think it's in the order of like at least $100 billion industry. I try to make some calculations on this.
So when it comes to these marketing accounts, which to be honest, I only came to my attention like a year ago, which is quite late, I would say, for how long I've been in the game. I always thought it's like the guy who owns the broker, he's just going in his back end and typing whatever he wants to type in. But I didn't realize it's towards big brokers in the industry that are also, okay, maybe they're not FCA regulated, but they are regulated by an entity. Even those are allowed to kind of get away with these things.
Yes, definitely. I mean, it's a regulated broker, as in it has a license to be a broker. But CFDs are still unregulated products.
Yeah.
So, for example, if you try to audit a CFD, a forex account, if it's not regulated, any of the big four auditing firm will say no to a CFD track record because they can't trace the orders. In a futures account, you can go to the exchange and ask, was this order actually transferred? And they can verify it. But it's not the same thing with CFD accounts. The thing is, with CFDs and prop firms, you're trading synthetic instruments, and they're not going through any exchange. So it's really opaque. It's really hard to understand what is what. Like, the only way is, for example, like Bernd, have a public leaderboard about it. That's something you can, like with FTMO, who now like it's too big to give a shit about any influencer, like that makes sense, or like a public competition like he's doing with the futures, or even Patrick, and having a multi-year track record. That's kind of stuff that you might want to verify before, choosing to spend your time and money into an educator.
How about I don't want to really bring up the dangerous three letters, but so I'll leave it at that. But you know how we see in the industry of maybe the teacher is questionable character, but he has so many students saying this guy is great, and even showing certificates and the right things. And that's a pitfall a lot of people end up in. I see you're leaning forward, so maybe there's something to say.
No, I'm just leaning forward. He's getting ready. I'm not getting ready. No.
But to that effect of
Andrea has a lot to say about that.
Just in general, like people can maybe get misled by students' success, and the student says, "I learned from there," and therefore people end up there and end up even more lost. How can someone navigate that?
I mean, if you're specifically talking about the three-letter guy, he who must not be named, about ICT, he's, it's just, you have to differentiate the man and the concepts, blah, blah, blah. So if you say, okay, the man is a scammer, it's clearly a pathological liar, blah, 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 the stuff everyone knows about. But, from the concept side of things, I'm not surprised that a lot of people got profitable with those concepts, but I would give the credit to, because most of those concepts are concept that has already been existed for a long time. The whole auction market theory model was born in the 70s and the 80s by Jim Dalton and Peter Stadelmeier, where they created volume profile, market profile. The whole fair value gap thing is nothing more than a low volume node. Is like this stuff has been there for a while, and so I'm not surprised that he just took some concepts, rebranded, made it extreme to build the cult-like following, and God gave it to me, blah blah blah, and And so I'm not surprised that some people found profitability with a series of concepts of technical analysis, but I wouldn't give the credit to the guy who, quote unquote, created it, but I would give it to those traders if those results are legit. Because again, a prop firm certificate is not necessarily indicative of profitable trading in the long term. That could also be.
It also just comes to my mind of when you have like 100,000 traders behaving in a certain way, law of averages, you'll have 1% make something out of it. And that on that scale, that can be a lot of people.
Yeah, it can look like a lot, but actually,
yes.
the percentage is not.
That's why in the comment section you have always like people talking in third person. They're always saying, "But what about this guy? What about this guy?" And I always say, like, "But what about you? Like, are you profitable?" But they're always talking in third person.
You're right.
But what about Kyle? What about this? Yeah, there might be like out of a million, there might be like, as you said, because these concepts exist for like ages and they're just rebranded. So he was very smart in rebranding things, like super smart, right? Hands down. But these concepts exist for years, and that somebody like was able to combine a few of these concepts and became profitable, maybe, right? 1 out of 2 out of 3 out of a million. That's statistical evidence, right?
Yeah, he has 1.5 million followers.
Exactly.
So if
law of
there's
averages,
if there's 20 profitable traders, I'm not surprised.
Yeah, exactly.
Well, when you do go up the chain of that information to whoever the guys you mentioned, how do you look at the theories that they have themselves, excluding, let's say, ICT's modifications or derivative of it? Is that a place people should actually just skip and jump towards, or even those are maybe outdated because they are a couple decades
They
back?
can feel free to study from ICT, from where I'm concerned. Like he made a very good work of divulging those concepts and making a sense out of it. And actually, I would dare to say that if ICT makes you feel more confident, like that those concepts work, and that gives you an edge psychologically in the market, believe it.
Placebo.
Just
effect, I
believe.
guess.
Yeah, just some sort of placebo effect. Like if that benefits you, I'm not the guy that's gonna tell you to avoid it. Actually, I like go for it, man. But if I have to speak about reality, I'm gonna speak about reality. Yeah.
I've also seen you doing some in-person learning, coaching, and so forth. Do you think there's any specific advantage if somebody's watching and say, I want to learn? Do you think the online way of learning is the way and is completely fine, or is there something better about being in person with the guy you're learning from?
I think the best is like having a one-on-one coach, but whether it's online, whether it's physical, but having a person who's actually done it and guides you through the hurdles and the the hardship of it. That's the best thing. Whether it's like online or in person does not make a lot of difference. It's just meeting the person is a bit logistically complicated sometimes, but as long as it's one-on-one, I think that's the best way of education. Like we've done with him a lot of in-person, not in person, but streaming live mentorships with a one-to-many approach.
Okay,
but the value you get from one-to-ones is completely different, but it's way more expensive for the students.
This was going to be my next point. So when you have someone that has the right boxes ticked and you want to have a piece of their time, it's not going to be $100.
Definitely.
And rightly so, because why is someone going to give their time away like that?
Definitely.
To the point where, let's say somebody is coming from a position of they don't have the money required to just pay for the education that they want to get. How far can someone go alone and just with the content online and the information and just a bit of self-curiosity and spending time in price action? Do you think that's an approach, or is it just you're going to have a lot of pitfalls?
Yeah, of course you're going to have a lot of pitfalls. Like education is just a shortcut to understanding which method, like a method that had some proof to be working. That's why proof is so important for educators. Like if you're just buying it because of lifestyle, then you're not buying it based on proof, just based on gut feelings. But yeah, I would say that
I think self-educating nowadays works, but there's a big but. It costs you a lot of money. It will cost you a lot of money
and time,
right? Money and time at the end of the day.
Yeah.
Is it possible? Yes. Is it likely? Maybe not so much, but it's possible. But it will cost you a lot of money and it will cost you a lot of time.
Cost you a lot of money because of fail challenges and these kind of things. Yes.
Right.
or not, because
How many students we have that came to us who said, like, just recently, before I joined OTC, I lost 6 challenges, and now like
slot machine.
Yeah, right. Or like I don't know how many challenges. Right, it costs them a lot of money trying it on them for themselves, like doing it by themselves.
Yeah. And I think at least if you have to learn it by yourself, you can, but at least do it the right way. Like, this is something I learned from him. I wasn't really into back testing before, but then he changed my mind about it, because you can, like, especially if you're starting from zero and you're doing it by yourself, the minimum you can do is to verify that what you're trying to do has some edge over the past, which is not guaranteeing that you're going to have it in the future, but at least you know that what you're doing had some efficacy over some time frame, you know? But people are just looking at some random video and then testing the strat, like, what the fuck, like, and they're gambling their money in it. So if you're gonna do it your way and try to find your own way, the minimum you can do is to backtest a little bit before, understand which concepts work, maybe do some optimization, and all like some sort of systematical process of approaching trading, and understand it's a profession. It's not a gamble. And you know, for us sitting at this table, it's pretty easy to say, hey, trading is not gambling. But for a lot of the people watching us, that's not obvious. Like, so many of them, they're just in trading not because they want to study or put in some hard work and they want to, you know, put in the hard work and get profitable, blah blah blah. They're here because they want some
easy money,
kind of fast money as possible, or choose the right meme coin. And
where do you draw that line of behavior between a trader's behavior and a gambler's behavior?
I mean, it's the mindset in which you approach the business with, I think. Like, what are you trying to achieve? Like, if you are here to try and achieve fast money without effort, that's the gambler.
Okay, without the effort part.
Yeah, the effort part.
I think it's also interesting because in this stage of my life now, I'm actually very quick to buy mentorship and pay, not just trading in general, just throw money at something, because, and I don't actually take it to the full extent of verifying and all of these things, because I know my worst case scenarios, I wasted a bit of time and a bit of money, but I also know I can move on to the next. And I think for a newcomer, if I look back, 9 years ago, I'd be very sensitive on who I pay, because I don't have the funds to just keep buying it again and again. So, and I think it's also very difficult for someone to part with money, because they just think, let me just keep doing what I'm doing and expect a different outcome. But that's also never going to happen, to repeat the same behavior and get a different outcome. It's a bit of a shell shock to say, okay, I need to actually go and get help, and a bit of an identity shift. But as you said, it's the best way to learn, because you just skip the whole process of someone else's journey. But it seems like you've got more of your time towards education in recent years. What is that because you had a lot of changes in the last few years, which is from not social media to social media, and now with the new projects of the prop firm. Why are you attacking the industry in such a way of so many things and bringing so much change with the receipts that you have, when you could just kind of take a back seat and carry on trading as you have been?
Oh, that's a very common question, because I like to build. I like to feel empowered in a way that this mix gives me purpose. Gives me purpose in life, getting up in the morning, looking forward to something. I've done it, and as I always tell people, I've been through so many stages of my life in my trading career. When I started off and I quit my job, 2014. I quit my job, my corporate job, 2014. So I'm now full-time since now more than 11 years. And in the first 2 years, and there was a period of 6 months, and I was already living in Dubai. I was going from beach club to beach club every single day. And back then I had already an Instagram account, and I was posting a picture from a different beach club every single day. And I was there by myself because my friends were working.
You still got the tan from those days.
But I felt so at some point in the beginning, you feel also empowered. You feel cool. Hey, you're the only one who can go on a Tuesday afternoon to a beach club when everybody's hustling. But at some point of time, you feel and only people can relate to that who have been through these stages in life.
Yeah.
And at some point of time, you feel sorry for my language, fucking useless. You feel useless.
Yeah,
I went bed. You go to bed at night and you're okay. You kind of think about, okay, what did you accomplish? Did you accomplish anything purposeful in life? No, I just jumped into the pool and had some 2 drinks. Is that purposeful? No, it's not. Right? For some people, for some people this might be purpose, but for somebody who likes to accomplish things, likes to build, likes to, support, and it's like it's not alive. And that's why I went to that.
And especially because your trading is so not time consuming.
And that's why it's not so time consuming at all, the actual trading, right? And going to the gym for 5 hours a day is also not like a purpose in life, right? So no, you need something. I think like everyone like needs. You could ask this question to anyone, like why is Donald Trump now like with 80s like wants to become a president, right? He has so much money. Why? Maybe it's his purpose.
It's drive.
Maybe it's drive.
Yeah. So,
right?
so
every successful person has this drive. They have enough money. They earned enough money in their life. They could lean back, travel on an island and chill, right?
Yeah.
But they continue building. And why should it be different with traders?
So instead of set, forget, and get a life, it's like set, forget, and start a business, kind of.
Keep pushing.
It's like creating a trading related business. For me, this is getting alive because it's just so fun,
definitely.
I want to kind of wrap up the episode towards predictions. I'm going to leave it open as predictions. It's going to be predictions on the industry, props, education, market predictions. Where do you see things changing in 2025?
I'm starting. You started.
I'm starting.
You started.
So I see that the regulatory authority is attacking prop firm this year, 2025. Okay. And this is the reason I think that FTMO did the move to buy Oanda.
For the US license?
For the license. For different, so multiple market opportunities, because it's not only US license, it's worldwide license. They have different license and they need the brokerage that is backing them up. And from the point of view of trading education, I hope that people will start to open their eyes, because it's true that you can just relate to an educator because this educator have some kind of profitable students. But before everything, you need to check the performance of the educator. You need to check if the educator that you are choosing to put time and effort in is actual trading for real, is making some money out of it, or if it's only making money from the trading industry. This is really different. Like if you are making money from CPA or martingale bot or signal service, you are not a trader. You are just a marketer that is profiting from the industry and is showing up a lifestyle. And they did some pretty fun experiment. I have one bot in ChatGPT, because you can create the agent right now. And I asked to ChatGPT how I can identify a fake traders. Okay. And this bot was like letting me input the name of trading gurus and give a check on the profile.
Wow.
And I got like 10 different bullet points. And the first one is showing off the car in the profile. Like if in the first 6 posts there is a Lamborghini or a Bugatti or something like that, you are not trying to sell your actual market experience. You are trying to sell your lifestyle to make young people identify with what you have, because you are insecure, because you have a lack of experience. And also what I noticed, that the best trader in the world are not there bragging for the profit they make every day. They are not on the social media showing, look how much I made today with this trade. Just go audit your track record. Just don't try to use the profit card to sell more courses. So this was a funny experiment with ChatGPT. I put some names, but I will not disclose here. And so the trading industry and the prop firm industry, I think it's the 2 main goal for 2025 to change. And I really enjoy what Bernd is doing from the educational side to the prop firm side. And I hope that all the trading educators will join forces, not only to make some more profit, but will just share how they want to shape this industry and how they want to educate people to understand what's real and what's fiction in 2025.
Very nice.
It's up to me, right?
Yes.
If you have anything to add, yes.
I mean, he said it all. From what I see in 2025, probably more scammers are going to pop up. Probably more scammy prop firms are going to pop up. Some shady brokers are going to pop up, and they're going to keep popping up every single year. But I think I like the trajectory that overall the global trading awareness is getting. We're getting more sophisticated with our knowledge and how we start to develop some pattern recognition also with trading influencers. So I see it pretty good regarding the trading.
It's actually interesting because I don't think anything particularly can happen in 2025. The gurus will still keep coming. There'll just be new names, new brokers, new props. But at least we on this show and everywhere, the influencers can have a hand in at least saying these are the patterns for the last 10 years. There'll also be the patterns for the next 10 years. Try and be a bit more informed in your decision making, because we can't change an industry and these people that are popping up because it's all unregulated. So at least the people being more informed is a protection. Yes, and Bernd, I think you already said the US prediction of, or not US, sorry, the post-election.
Yeah, I mean, I can just echo what these two gentlemen over there said. I fully agree on every single point Andrea and Fabio said. And let me make a market prediction here, right? So, so we are in post-election cycle, right? 2025. Equity indices, stocks, gonna be super bullish. We're gonna see a choppy first quarter. Then around April, we're gonna see a big rally into the summer. And then again, August, September. This is usually where it's again like rather choppy. So maybe end of July, August, it's gonna go down, but then we see a very, very, very strong end of the year rally around October, November, and then we are off to new highs. That's it for 2025. And maybe in 2026, because it's the midterm, and I can already make that prediction, I expect the next market crash around mid to end 2026, because it's a very weak year in terms of... oh, by the way, I almost forgot, we are also in a decennial year. So decennial patterns are very powerful. So years ending with 5. So there's a study out there done by Yale Hirsch. It's called Decennial Patterns. He checked actually how, and he goes back every single year since the Dow Jones existence, which is like 125 years or so, 124 years. And he checked the Dow performance in every single year. And so he came up with that statistic of, okay, years ending with 0, what's the Dow performance? Years ending with 1, what's the Dow performance? Years ending with 2, what's the Dow performance? So we are now in the what's called the phenomenal 5. 2025 is a year ending with 5. Like 2025, 2015, 2005, 1995. So years ending with 5. So in the past 13 years, where the year ended with 5, we had 12 very, very bullish year and only 1 losing year. So accumulated profit, if you just had invested in the years ending with 5, you would have made 300% return on the Dow Jones. So years ending with 5 are the most bullish years on equity indices, in particular on the Dow Jones. So you have post-election year, which is super bullish by itself, post-election years, the years after election, plus you have the phenomenal 5 decennial pattern, both combined off to the moon. Yes, exactly.
Nice. All in.
All in. But only like in March.
But this is not financial advice.
How about crypto predictions? He's a great
crypto prediction. I think that we will continue to rally following the stock market. We will have more volatility on drawdown, but I'm bullish on Ripple at the moment. So from this level, I think Bitcoin will continue to rise to 130,000. Then we'll see some consolidation, but I'm pretty bullish for what Ripple is doing, because Ripple is the villain of the industry. It's the bad guy. It's the one that is supporting banks, but we are here for make money, not to change the industry, because we already know that Bitcoin is not the solution for diversify the new asset. It's a store of value. And so I follow up the prediction of Bernd. I just think that it's not so smart to buy at this level Bitcoin, so I will not search for bullish position, and I don't think we will see a big retracement, a deep retracement till 2026. But we are still low on Ripple. The last buy position that I had was $1.2, and I seek to get the 3.5 again and then the $5, because they are already joining the SWIFT system for payment, and it will be a real game changer. And everyone is focusing at the moment on Solana, meme coin, and they are not watching what actual crypto asset is changing the industry at the moment from the payment side. So, And regarding normal markets, I'm checking palladium. I'm long on palladium. I'm waiting for the breakout of the profile of the volume. And from the fundamental side, we are really discount on the asset. And I checked one report from UBS because I also study bank report. And this was the reason for the last buy position that I got on copper. And I think Palladium 2025 can raise a lot.
Beautiful predictions, and yeah, very enjoyed the episode. So thank you, gentlemen, for making the time.
Thank you.
Thank you.
Boom.